California was once the ultimate American dream. The land of Hollywood, Silicon Valley, beaches, luxury, and endless opportunity. For decades, millions of Americans moved west, hoping to build a better life here. But something has changed. Today, more Americans are leaving California than moving into it. Families are packing up, businesses are relocating, and even lifelong residents are asking a difficult question. Is California simply becoming too expensive to live in? And the answer may be more complicated than you think. To understand why people are leaving, we first need to understand what made California so powerful in the first place. If California were its own country, it would have one of the largest economies in the world. It became the global center for entertainment, technology, innovation, and culture. Hollywood transformed the movie industry. Silicon Valley changed modern technology forever. And cities like Los Angeles and San Francisco became symbols of success and ambition. For generations, California represented possibility. Good weather, high-paying jobs, beautiful coastlines, and a lifestyle that people across the world admired. But over time, that dream started becoming harder to afford. The biggest reason Americans are leaving California is simple: housing. In 2026, California's projected median home price is expected to reach around $905,000. That's nearly double the typical American home price. And according to recent estimates, only about 18% of California households can actually afford a median-priced home. To qualify for that home, a family may need to earn more than $200,000 a year. Meanwhile, the average household income is nowhere near that number. And this creates a painful reality for many Californians. You can have a good job, make six figures, and still struggle to buy a home. Even renting has become extremely expensive. In many cities, monthly housing costs now consume a huge percentage of income. And for younger families, first-time buyers, and middle-class workers, homeownership is starting to feel out of reach. For many people, the California dream hasn't disappeared. It's simply become unaffordable. And now, people are leaving. California has experienced 6 consecutive years of net domestic population loss. In 2025 alone, the state lost an estimated 216,000 residents through domestic migration. That means more Americans moved out of California than moved in from other states. And where are they going? Mostly to states like Texas, Arizona, Nevada, and Florida. The reasons are obvious: lower taxes, cheaper homes, more space, and a lower overall cost of living. In many of these states, homes cost less than half of what similar properties cost in California. For some families, moving out of California means finally being able to buy their first house. And after remote work became common, many workers realized something important: if they can work from anywhere, why continue paying California prices? But in 2026, there's another major reason people are reconsidering life in California: wildfires, and the growing insurance crisis connected to them. Over the past few years, California has experienced increasingly destructive wildfire seasons. Entire neighborhoods have been damaged or destroyed, and insurance companies are responding by raising premiums, limiting coverage, or leaving certain areas entirely. After the devastating Los Angeles wildfire disaster in early 2025, California's insurance system faced enormous pressure. Enrollment in the state's FAIR plan, essentially the insurer of last resort, surged dramatically as private insurers pulled back. Today, many homeowners are discovering something shocking. Even if they can afford a house, they may not be able to properly insure it. And for some families, insurance payments are becoming almost as stressful as mortgage payments themselves. Others are finding their policies canceled altogether. This has created deep anxiety among homeowners, especially in wildfire-prone regions. Because now the question isn't just, can we afford this home? It's also, what happens if disaster strikes? And rebuilding after a wildfire can take years. Some communities damaged by recent fires are still struggling with permits, construction costs, and insurance shortfalls. For many residents, the uncertainty is becoming exhausting. But despite all these problems, California is far from collapsing. And this is important to understand. California still remains one of the most influential economies on Earth. It continues to lead in technology, entertainment, artificial intelligence, and innovation. Millions of people still dream of living there, and many wealthy professionals continue moving into major California cities. So this isn't the story of a dying state. It's the story of a state becoming increasingly difficult for average Americans to afford. For some people, California is still paradise. For others, it has become financially impossible. And that divide may define California's future more than anything else. California still has sunshine, opportunity, innovation, and global influence. But for many Americans, the cost of chasing that dream is becoming too high. And as housing prices rise, insurance costs grow, and affordability continues to shrink, more families are making the same difficult decision to leave behind the state they once believed would give them a better future. The California dream still exists, but in 2026, many people are wondering who can actually afford it anymore.